All right, so welcome, folks. Getting the room going here. We will kick off soon. We got 15 minutes or so till the open, so we'll just kind of casually hang out for the next 15 or so. Bring any questions you may have, throw them in the chat. Jeff is here, of course, and we'll be happy to take any questions. And for those of you, and we've opened this one up to the public as well as the regular TRG membership. So for those who maybe are new, first of all, welcome. Thanks for joining us for what we're hoping is going to be a really interesting Sunday reopen. But the way the format of Sunday works is Sunday is usually pretty laid back. It's a pretty low-key session most of the time. Every once in a while we get a really unusual open, but usually it's pretty low-key. And we kind of have this as sort of a bit of an open office hours, ask me anything kind of thing. So questions can run the gamut from straight-up trading stuff to general business questions. Jeff's got tons of experience in startups and VC and that kind of thing. So sometimes we get questions about that sort of stuff too. So any questions at all, throw them in the chat and we'll see if we can field some of them and we'll take it
or
from
make
there.
Something up if we can.
Yeah, exactly. All
right. Welcome, everybody. If you're not a TRG person, welcome as well.
Yeah. You can always recite Monty Python or, something like that. That's always good.
Yeah, tell bad jokes, all that
Exactly.
good stuff.
Hey, Alan. Hey, Brent.
I got the domes up and my context screen's up. And it's a very interesting scenario here. So I'm going to just take open questions until about 5 or 8 minutes before the open, and then we'll review where everything closed and what looks interesting right before we actually reopen, and then we'll watch it reopen. So that's the plan. Come on in, make yourself comfortable, put questions in the chat. No, it's all topics. This is open Q&A on Sundays. So as JVC said, startups, VC, entrepreneur stuff, raising money, trading, any of that stuff. Bring it on.
Cats, dogs, pet questions, muscle cars.
Yeah, muscle cars did that too. Raced motocross bikes, hot rods.
Oh, and need to stay hydrated. I will be right back. I'm going to grab my water.
Yep. Do you have it now or did you have it? TriStar. You had it. All right. Well, then you'd be familiar with what my high school wheels were. In the early, the mid-'70s, I was in high school, and my first car I ever bought was a 1968 Firebird 400. And that was a very similar car to the 68, 69 Camaro, similar body. The Camaro had a smaller engine, 350 in the Camaro or smaller. The Pontiac had the 400, which was pretty sweet. Yamaha, oh wow, Yamaha two-cycle Enduro. Yeah, I was 77 TriStar. Yeah, that was the small block. That was a nice motor. I raced Suzuki two cycles, 125s and 250s. Did you ever race your car, TriStar? Did you ever bracket race it or anything like that? Just on the street. Oh, that's not all right. Well, I tried to avoid that, but I did bracket race at the Southern California area strips, and a little bit on the Hermosa Strand and Van Nuys Boulevard. I will admit it, even though it's not something I'd like to admit because it's just never a good idea to race on the street for any million reasons. Yeah, I remember that. That was mostly on vans, though, the old surfer vans of the same time frame. So if you're just rolling in, we're just chatting before the open gets underway here. I'm going to do a little preview of my thoughts of it about 5 minutes out, which is in about, I don't know, 6 more minutes. Meanwhile, we're just chatting.
Oh, that's right. Bruce, you and Jeff were in high school together. That's right. I always forget about that. That's funny.
Yeah, I basically had 3 things that high school for me was, I had a girlfriend the entire time, one girlfriend pretty much. I mean, we broke up now and then as everyone does in high school, but it was her, the track team and my car. That was my life in high school. We had a great track team. We were state qualifying CIF champions, and then, the cars were kind of what we did in the evenings, and surfing, of course, but I wasn't as much of a surfer as most of the people where I grew up. I was more on the motorcycle and car side, and those were, they overlapped, but they weren't quite the same crowd. Okay, so here's some good questions. Kevin Vope is a eye doctor. He does LASIK surgery up in the Bay Area. And Kevin B is a retired Justice Department official, a lawyer. He lives not too far from me, I don't think, up here somewhere. All right, so there's some questions here. Steve, what are your thoughts on learning order flow when your available time is US evenings? Oh, Steve, you're the one that's been talking to me in chat. Are you the same Steve? Steve C? Initial C? Yes, okay. Yeah, Lee wrote you an answer there that I partially agree with. You can learn some other markets, but I personally like trading the overnights in the US. What is early morning for you? From when to when could you trade, and in what time zone? Because that's a key question. What's his name, Todd? I might know him. Central Time, 5 to 7:30. Okay, I don't know, Eric. All right, so right before the full-blown open, but during the news and stuff, yeah, you could definitely trade that time. You'd have to have a playbook that was really adapted to trading news and economic releases and whatnot. I don't disagree on the Asian markets, but I don't know that that's necessarily an advantage. Yeah, please don't put any links in the chat. That's a security problem. So, not a simple question to answer in a forum like this, Steve, but if you come, you're going to be at work then. Let's see. I would say during the week when we do open Q&A on Tuesday, I could show you some more examples. But, it depends on what your style's going to be. And if you can't trade market structure at night because there isn't any structure, and that's one part of order flow. But the other part of order flow is about price action, and that's primarily what I do. I use structure during the regular trading hours, but I don't. My primary focus is on the price action, and then the structure adds to the quality of reading that. So, again, depending on what you're looking, the order flow is about understanding at the moment, in the now, what the auction is all about. So let's see, IT guy. That's what you do, Steve? Because that's a lot of our backgrounds too. I was an IBM and Microsoft guy in addition to a bunch of other things. So, all right, again, that doesn't tell me about your trading style though. Are you looking to scalp? Are you looking to do intraday swing trade kind of stuff? Because overnight, that's hard to do. But price action scalping overnight is pretty orderly. It's actually pretty technical in the sense of technical analysis, which during the day can be misleading. Why don't we do this? Let's get the reopen out of the way because it's about 6 minutes out now. Looking to scalp, still developing your own style. Okay, if that's the case, a good scalper can scalp 24 hours a day. It doesn't, as long as the market's open, there's opportunities to scalp. Scalping is about reading changes in momentum and understanding where that where the inflection points are that will affect the momentum. And it's a very, very real-time event. So you could pretty much do that anytime. And I'm a good example of that. That's me. You just described me as a trader. I will trade structure during the day, the first 2 hours, for example. But in the overnights and on the weekends and the rest of the time, I focus on the price action and I scalp it. Every trade's a scalp unless it proves otherwise. Number one. Number two, always take profits. Number three, don't lose money. That's the scalping rules. It's actually very simple to scalp using order flow if you don't overthink it. Let me ask you another question. Do you have a lot of already experienced trading? Have you already tried and failed at different systems or technical analysis or whatnot? Or are you relatively new to the whole game? Thank you, JVC. Okay, here's what we're going to do. Okay, so you're one of those people that, yeah, you've tried a bunch of stuff, nothing works. I get it. Okay, I'm going to ask you to bring your question back up, or JVC, please remind me.
Okay.
About a half an hour in, we'll come back to this because you're a perfect guy to learn to scalp and just disregard all that garbage. You need no indicators on your chart. All you need is the volume and the price, and that's what you're seeing here. So anyway, we'll talk more about that. I'm going to clean up here a little bit so we can watch some things. And so give me just a second. Let's do that one. All right. So basically, I just wanted to go over what I was seeing in the structure. Interesting. If you look across the top here, this is how I organize my trading. I've got just the volume profiles across the top for 60-minute periods, looking at both overnights and regular trading hours. The regular trading hours are in blue. And, ES put in a hell of a run up there and didn't quite take out the futures high. It did take out the cash high of the year, all-time high, So that one's very interesting. It's noteworthy that NQ is much lower down in its relative performance as in RTY. Those both got beat up a lot the last few weeks. So that might be interesting to watch for a lack of correlation or for something to the advantage of NQ and RTY. That's generally a bullish scenario. In other words, if they're leading up, that's what I'm talking about. We'll come back to that. Over here, YM, again, was a lot like ES, but it still is a little bit off of what was the recent futures high. So the whole scenario is very interesting. The fact that this was a bunch of moving right at the close on some, look at the momentum here. This is a 1-minute chart, and look at that close. I mean, it's crazy. But by the way, Steve, as a scalper, you need to know nothing about this setup other than a good spot to enter it, which is the spring right here. And we'll talk about that a little bit later. But this was a real easy thing to trade. I wish I had not been doing something else when that occurred Friday. I would have liked to play a little more with that. Anyway, so that's kind of the big picture. I expect we're going to get price discovery right off the open. I've got my dome set up here to trade the micros just so we could have some fun if it gets interesting. I'm not just going to jump into it, but I will trade it if it gets interesting. What's interesting? Well, I'm expecting price discovery at the open. That means I expect to see very thin bids and asks because nobody's going to be real sure if this price is going to hold up here. That's what I expect. Now, what else could happen? We could see a ton of selling. People selling that high or what they perceive to be the high on Friday. That's another scenario. I may be on that one. And then, of course, we could push to new highs even further. Whatever stimulus caused that push up, who knows if it's done. There's all these stories going around that Goldman sold billions of dollars worth of stock on Friday and, big blocks and all that, but the price still went up crazy. So weird market. I've been trading 48 years now, and this is among the weirder ones I've seen. So anyway, that's kind of my 2-minute overview of the reopen here. And the nice thing about Sundays is it takes a while to settle down, and we can just kind of watch it. I trade the opening 5-minute and opening 60-minute range of regular trading hours, but on the Sunday, I give the opening about a half an hour before I really start thinking about anything conclusive. So that's the intro. Let's see, what else do we have here? Do whatever MACD tells you. Yeah, that's useful.
Perfect, Lance. Every time.
Yeah, I mean, there's a million ways you can analyze what happened Friday, but that's meaningless right now, and that's the point I'm making. Order flow is about now. So anything you saw in TPOs on Friday is irrelevant. In X-Line, I don't know how to pronounce that name. Maybe you could change it to something like Steve or Bob or Joe.
Actually, that brings up a good point I forgot to mention at the beginning. Anybody, if you don't mind, if everybody be so kind as to rename yourself in Zoom, just so that we know who people are. We're all real people here. We'd like to just be able to, call people by their name or something. That'd be helpful.
Yeah, you'll see a lot of names that a lot of TRG members are here, and we all know each other. So even just a first name or a nickname is fine. I just don't want to call you, Super Trader 777 or anything like that. So. Yeah, obviously, if you're GRG, whatever your pit name is, that works. We probably already know you. If you're a guest, whatever you want. This is one of the cultural things about our group. We're no BS. Everyone's real transparent. We talk about our real world and our real trading. We don't make crap up. And
hi.
Whoop, that's me. Sorry.
I was wondering about that. Okay, so here we go. We're off. Look at the spreads here on the ES, guys. First of all, they're single-digit bids and offers, and there are lots of gaps. So this is a very dangerous condition to trade under. You can get a fill, and it can be way off the trade. Now, there's a lot of selling energy right here, so I'm tempted to join this. Let's see if we can get a little pop-up back to right here where we opened, because so far everybody's been leaning on the sell side, which is one of the scenarios we talked about. And I'm getting very tempted to join that, but I don't want to join the first push of it. I want to give it a little more time to see if that's truly what's happening. That's my hunch, is that we're gonna sell off up here, but let's see. We're opening basically flat right now. I'm watching that on one of my other monitors here. So I'll share that with you periodically. The volume is very, very low. The bids and asks are very light, so that kind of makes it really dangerous to do anything. But, if you can get a trade entered way off the current trade, if I could get short up here somewhere, that lowers the risk of it just running me over because there's thin trade. So that might be interesting to try. There's going to be a lot of people trying to short this, so my gut is it's going to get pushed up, but I think it might be a little while before that happens. I don't know. Right now the tape, I'll talk about my meters and tapes here so you guys know what I'm looking at. But right now the tape is kind of balanced, but the initial selling that I saw is gone. And so we're perfectly agreed on value right here. And it's totally balanced. There's blocks on the buy side. There's blocks on the sell side. This is just kind of a stream of consciousness, guys. I'm going to do this for a few minutes until it settles down. Might take a trade, might not, and then I'll come back to the questions. If there's anything glaring, JVC, who's our community manager and our co-host here, he will call my attention to it, please.
You got it.
Yeah, that was a pretty lame push down, Lance. But remember, it's Sunday, it's thin. A lot of the larger funds won't trade at all on a Sunday night. So anybody trading is going to be more speculative. And, okay, this is what I was seeing before, a ledge push down at the lows. And that's what it's doing again. I'm going to join that just for fun and see what happens, just for a scalp, maybe. But we may be wrong, in which case we'll get back out of the way. I just kind of feel like that's going to be the first thing that happens. I've been wrong before, though. Again, with micros, and there's plenty of room to play here, and so we'll try that. We have ledges almost always break. This is a ledge right now. It's the edge of the session volume profile, and it's pushing like it's going to break it. So that's what I'm kind of playing here. Those are pretty common, particularly in the overnights, ledge breaks like that. But this tape's all over the place, so who knows? You can see the guys that are posting larger liquidity here. Those are probably the paid CME liquidity providers here, and they exist in the micros. CME gives some people some money to do that. Okay, here we go. I'm going to scalp out of that there because it's not getting sold. All right, we got 4 ticks. That was fun. Let's watch a little more. So anyway, that's this guy and this guy, and those, based on how far they are off the trade, that's probably the paid liquidity providers. And, they're just basically paid to put up a large bid and ask to keep the market stable. Sometimes the MES and the ES have diverged a lot. And so that was the CME's solution to that. And so you can kind of use them as a gauge as to, where the boundaries of the market are at the moment. They're pretty good at estimating that. They use a little algorithm for it. It will rarely trade their size. As it gets toward them, you'll see them move away. If it does get against them, that's usually a sign that something's going to break, because they will usually move off the inside mid desk 90% of the time, I'd say. At all-time highs and at limit lows and stuff like that, I've seen them come in tighter. So that would be a notable exception. You can see the same thing here in MNQ, but notice how much farther off the trade they are. And that's just the volatility of NQ. It's typical. See, there's one right there and there's one right there. Probably the same guy. like I said, that's one of the best jobs in the world to get, to just provide liquidity for the market and get paid to do it. Okay, let's see. Yeah, I wouldn't get too price level oriented here, Sebastian. It's so thin, we could run over a whole lot of price levels. You're going to have to kind of just go with the tape if that's what you're looking to do. So we're still pushing down a bit. So something else that happens frequently on Sunday nights is we get range extension both ways before we get any sort of break. If we're going to get a break anyway. So that's what's happening now. We've got some decent volume in the middle and we already extended up a little bit. So now we're kind of extending down. This is really typical on a Sunday night that this would happen. And then we'll kind of see what unfolds. That's why I like to give it a half an hour. Meanwhile, it's not moving fast enough to trade. So we'll just keep an eye on it. I'm going to do one other thing here. The volume is really low, but let's go ahead and take a look at. Yeah, just for fun, I'm going to bring up RTY and YM here. And correlation overnights is not as useful as it is during the regular sessions. But when we're watching like this for potential breaks or changes in momentum, it doesn't hurt to watch all four indexes together because you can kind of see it hit all together. And that is typical overnight, that indexes will move together if there's some momentum hitting the tape. So this is kind of an alternative way of watching. We can kind of see everything at once and see if there's any energy in one or the other. All right, so that's a good spot to take a break for a minute here and let this settle down. Where are we at? 306. Yeah. Again, I like to see half an hour or so before I really evaluate what's going on. We continue to be fractionally down. We're correlated, but it's so little movement, it doesn't really matter. The volume's very, very low, even for this early. So everybody's kind of playing wait and see what everyone else does, is my feel at the moment. So we'll do the same thing. Being a trailblazer in the market is a really bad idea. It's a good way to get an arrow in your back. It's a much better idea to read what's happening and either choose to join that or wait for that, whatever's happening, to slow down and maybe fade it. That's kind of the general way to think if you want to learn to scalp well. And not have any preconceived notions about any price levels or support or resistance. That stuff is all kind of meaningless. So that's what I was driving at with you, Steve. The problem with trying to learn to be a scalper from technical analysis is that there's no technical analysis that shows you legitimate scalping points. It's by definition, it's all late. So you either have to try to predict the future, or you have to take a lot of odds that you're wrong. So it's much better to learn how to read the microstructure, the real-time tape as to what's happening. That will get you a much better entry than any sort of technical analysis will. And then it works or it doesn't. It's literally that simple. So, yep, no big ideas, no overthinking. Yeah, we'll talk about the high volume nodes a little bit in a minute. So I look at scalping, those of you that have asked about this, there's three things that matter when you're scalping. Number one, you need a direction. And if you don't have a direction, you can't scalp because, you need momentum. If you're predicting changes in direction, or if you're predicting that support or resistance, quote unquote, are going to hold, and that's the basis of your trading system of any kind, scalping or otherwise, that's insanity, because it doesn't work, because markets don't follow those behaviors. Backtesting doesn't work because there's too many variables. You can test an idea, but it will never work in real time because you have to filter the variables out. So instead of having to go through all of that nonsense over and over and over again and continually losing money wondering what you're doing wrong, which is what most people do, what we in order flow do is we just say, what's happening right now? And is that something I can capitalize on? Now, during the regular trading hours, as I said, we would look at a view more like this, and we would say, well, from a structural point of view, and we'd look at what that means. But in the overnight, looking at a structural view doesn't make sense, because this trading that went on Friday was based on what the equities were doing and what other things happening in the market. And those are not happening right now. And that is a very simple reason why none of that stuff works. So it's much more useful to look at what's happening in the moment and learn how to read that. And that doesn't just mean you have to be a scalper. You can swing trade using the exact same approach. What you're doing is you're looking for good entries, and those often become good swing trades. For example, look up here on the ES. If you were able to get a good short entry like the one I just demonstrated a moment ago over here, and it continued down, that could turn out to be the swing trade of the year and go all the way back to, say the first hour high on Friday. But if I don't get a good scalp entry up there, then I've got to use all kinds of hope and pray when I enter that trade that it's not going to revisit the highs. And then under what condition would I leave that trade? It's too hard to manage risk looking at it that way. Yeah, it's a high. Yeah, it got sold. There's a big wick right there. There's a big high volume node. All the stuff that says this could be a short. But until it is, that's a meaningless discussion. Much better to watch what's happening in the moment. And if it becomes a short, you'll catch the drop down just by virtue of watching the short-term price action. So that, in a nutshell, is kind of what we do in TRG and what I do as a scalper. So questions on that, please post them. In the meantime, there's absolutely nothing to trade here. It's really quiet, which is one of the things. Remember, we talked about 3 possibilities. Really quiet is everybody digesting. So we still have price discovery. It's still really thin, but nobody's trading it. That will change as people get a little bolder going into the night. So let's watch it. We'll talk a little bit more about that. I'm also just going to bring up gold for fun here. There's nothing happening in gold yet. I've been watching it on another screen, but there's the gold dome. And here, let's just make that easier to see. There we go. So we can watch that for a few minutes too. Gold is trading at 30. And let's see, that's down a tiny bit. I guess it closed up at 31. So it's down a teeny. So that's kind of meaningless too. All right, so I'll leave that running in the background. I'll put the indexes back up. And if we need to bring gold up quickly, we can do that. All right, meanwhile, let's have a look at the footprints, see if there's anything developing in the short-term structure that's worth watching. I don't think so, but so in addition to watching, the longer term 30-minute structure on this chart that I brought over from my other window, the other thing that we do is we watch the very short term price action, and I watch it a few different ways. I'll go through what these are in a minute, but right now I'm just watching the footprint around this low. This is where we opened. And, we're trying to form a bottom here. And if you look over here on the dome, it's doing a nice job of forming a nice bell-shaped curve. This is how a market trades. It's roughly at value at the moment. So again, there's nothing to trade here. It's not looking like it's going to go down. Could we challenge the other end of the range? Yeah, I'd say that's likely. So let's see what happens when it gets to, say, right about here, this spot, call it 62. That's where the liquidity guys are at the moment. That's a high volume node right there. So let's just keep an eye on that spot, see what happens. I'm going to draw a little line there just for fun. So this high volume node right here I'm watching there, and that's kind of a little line in the sand. So if it gets up there, there's a good chance we could break and hit the highs again. And that would be a ledge break like I was talking about earlier, and I'd probably go ahead and get long if I saw that happening. So that's all I got in terms of setups right now. So I will take questions. Let's see what we got.
Jose's got one for you about MBO.
Oh, good old MBO. Okay, so let's see. Oh, let me answer the Suez Canal one first. It's priced in as far as I'm concerned. Everything going on in the Suez Canal, everybody's priced in that there's a disruption. Oil is not trading real. Here, I'll grab oil so you can see it real quickly. Got gold on this one. I'll switch it to oil, and you can see what it's doing right now while we're talking about it. Anyway, I think if it continues to be stuck like another week or whatever, that could make a lot of commodity prices go batshit. But at the moment, I think it's priced in because everybody knows what's going on. So oil's at 60.54. It's been a lot higher recently. Nobody really understands oil other than supply and demand and momentum. And I'm saying as a trader, and I've traded oil my whole career, oil and the crack spread. It's if you try to predict oil based on world events, you'll never get it right, is my experience. But it doesn't hurt to keep it in context. So I think if there was something significant from the Suez, it's been priced in, at least so far. Anyway, oil, in my view, is too high. I think oil's pricing in a big economic recovery that has yet to happen. But that's a personal opinion. I'm not trading off that opinion. Okay, so let's see. You said there was a question from Jose. Thought on MBO size. There's a 100 lot at 56.25. Yeah, I would not place any value on that right now. It could mean any number of things. Somebody closing a position, somebody opening a position. The volume is really light. The liquidity is really light. It's overnight. The value of MBO is dubious during the regular trading hours. I mean, you have to really use it right. Lee gave a good presentation on that last week. And even then, it's not a crystal ball. So be careful interpreting anything particularly overnight in MBO. I think it's a useful filter. If you're looking at a spot like I am, say, this, and you said, okay, there's a guy at 56.25. That's just off the low. That makes a lot of sense. Why wouldn't you be there? So, but if you told me there was a bunch of blocks up at 61, that would be of interest because I'm looking at that as a breakthrough IP already. I don't see the low as a big IP other than, will continue getting pushed down until buyers step up, which they might not do. We could go down all night. That's the kind of slow drip back to the first hour high of Friday scenario. Totally possible. Totally possible. Okay, so let's see. That was those two. Other questions, please stick them in the chat. It's open Q&A, and it's pretty quiet, so there isn't that much to watch here. So this will be a good time to get your questions. Let's see. What was I going to say? Oh, I see Dimitri's here. Dimitri is one of our TRG alum. What's your read on this, Dimitri? I don't know if you want to stick it in the chat. What's your think on this high that we hit Friday? Knowing your style, I'm guessing you're short from Friday close, but let's see if I guessed right. Ocho, how many different platforms am I using? 4. I have... on the screen you're watching, I have Jigsaw, which is these domes over here, and the tapes. The footprint charts are Sierra. All of the little charts that say chart on them are Ninja 8. And then over on my other monitor, I have some stuff running in Thinkorswim that's some old legacy stuff that I coded up, I don't know, 8 years ago or something like that. That's useful. But it's not really order flow related, stuff like internals and things like that. Yeah, I figured that would be what you would do, Dimitri. I did it with a triple ETF, but other than that, I'm just watching. I was out sick last week, so I didn't trade Friday's close. But I was thinking about you when I saw that stovepipe up the chimney there at the very top and the wick on it. This is a 30-minute of the move up at the close, and it was quite a move. And on these 30-minute, there was wick, pullback, and so really hard to interpret that. But if you got in at the close or anywhere, this price rejector or anywhere around there, it was a very low risk place to be short at the close. So good job, Dimitri. That's the right way to do it. Yeah, I think 36 could definitely be in play. But again, I think there's too many people that are already thinking we're heading there. So I don't think that a move the other direction first is out of the question. That's why I really like this 59, 60, 62, that whole inflection area up there. So, all right, I'm going to erase that stuff because we know where we're watching. So let's see, where's my little toolbar eraser? There you are. Okay. Okay, so I don't see any other questions. Boy, quiet group considering it's so big. You guys just listening to me rattle along, and that's entertaining enough. Nobody has questions. Oh, you know what we could do if you want? I'll talk a little bit about my other views here. I told you what was over here on the right. These are Jigsaw domes. The liquidity map is the auction vista in Jigsaw. I don't really pay much attention to that, but I do look at the flip charts and the volume. Flip charts is the kind of a snapshot of the stacking and pulling on the dome. These are tapes. I'm just running two sizes. One's everything, one's blocks. And the power meters are just summarizing the tapes for me so that I don't have to watch them all the time. And so that's what's over here on the right. I use 15-second charts and linear regression to scalp. Along the bottom here, you're just seeing delta, bar by bar delta. And that's the other thing that I use to scalp. And that's what we teach in our boot camp, is how to do that. And I use the 1-minute views to look at the volume profiles, like this high volume node up here that we're currently selling off from. Same one up there and there. Boy, that's interesting on RTY. It's not just a high volume node. It's a whole bunch of them. It's not even a double D. It's like a quadruple D. Look at all these. So RTY was sloppy on its way up. That's worth noting as well. And then, as I already described, the top one is just looking at the volume profiles for recent highs and lows and recent high volume nodes on previous sessions. So that's the extent that I look at previous sessions. Again, those are potential inflection points. First hour highs and lows are the blue lines, and you can see the gray in the background. Those are the overnights, and the blue volume profiles are the regular trading sessions. So I can kind of see where the high volume nodes were, where the inflection points were. For example, the low from Friday was an overnight high volume node right there. That was the first hour low, and it just never looked back. So if it gets back to that line or anywhere in that neighborhood, call it 28 to 36, maybe even 40, top of that high volume node right there. So, that would be an interesting spot to look for. Maybe buyers might re-enter if we get down there. So again, we don't use support and resistance as terms because, number one, they're stupid. They imply directionality, and an inflection point doesn't imply directionality. It just implies that was a place where there was a debate. People were buying and selling. That's why there was high volume. That doesn't mean one group was right and one was wrong. It's not support. It's not resistance. That's technical analysis, and volume and order flow works better than that. That is not useful anymore. I used that 15, 20 years ago, and in those days, because we didn't have order flow data, it was the best thing we had, and it was useful. But to Steve, C, and a few other people here, that's why that stuff just doesn't work now. It's just dated. It tells you what happened in the past really well, but the days of the past being the right predictor of the future are over. I mean, it never really worked that way. But back in the technical analysis days, again, that was the best thing we had. Now we have, second by second data of who's buying and selling, real time. So none of that matters. It just matters that we might bounce or go through those points if we revisit them. So we call them inflection points, and we treat them as that, and nothing more, nothing less. So, are you talking about the class, Todd, the ETF class? Yeah, it is. I'm not sure when we're going to get it in. I may do a little free preview of it for TRG first before we do the public one. I'm not sure. I was sick last week, and I was trying to get everything reorganized for that. And I'll know the answer in a few more days. We'll definitely do something with it in April. I just don't know if it's going to be the public class and the TRG or just the TRG preview. So, okay, let's see some other questions here. Let's see, Jeff, I noticed in older workshops you did not have ask bid on your tape. Why the change? It's not that I don't have it. You can turn on whether it displays it or not. I do that when I'm teaching boot camps so that people know what my colors mean. I know what they mean, but that's the reason I turn it on. So it calls your attention to it. And sometimes green it can mean a variety of things. And so, depending on where that went off. So for that reason, it can help me too. But that's a good question. Good eyes. I'm not looking at that, Jeff, to determine whether it's going by on the bid or the ask. I'm looking at the combination of the tape. It's the tape over time. I'm watching it and I'm looking for patterns in it. So any one trade is not likely to be significant to me. That's kind of the furu stuff that they teach, like, oh, there's an iceberg there. That's a setup, you know? And again, most of that stuff is nonsense. It just doesn't work like that. So if I see a certain single trade go by, it's not going to call my attention. But a whole bunch of them, you know, for example, a whole bunch of blocks on the sell side, like right here, that, you know, when we push down through the lows, that's what happened. And that's what you expect to see. That's how a low should look. And so if I saw, instead of that, I saw, you know, somebody buy a bunch and then the sellers kept up, I would say, okay, you know, it's being contested, you know, maybe that might be a good place to join the sellers. So, so that's what I'm looking at. I'm looking at the transition from block to block and groups of blocks, and then the meter is summarizing it. So right now, this is, let me double check what I've got my settings at now. I think the big one is set for all trades and either a minute or 30 seconds. Let's see. Okay, yeah. So the big one is 30 seconds. So this one here and this one here is 30 seconds. So it's summarizing all these trades over 30 seconds and showing you how many on the buy side, how many on the sell side. So the blues, greens are buy side, the pinks, purples, those are sell side, reds. Okay. The bottom one is filtering for blocks a little higher on ES than it is NQ. Notice how I'm using tapes for the minis, not the micros, even though I'm trading the micros. Always use the tapes for the biggest instrument because that's where the most money is and that's what matters. You can run the tape of the MNQ next to it if you want, but it's not very useful. You'll see more in the NQ tape. So I'm filtering that, and that's what this little tiny power meter is for. So like, see, that says 31. That's just that 31 right there. So that's the blocks over the last 30 seconds. So I'm just getting a sense of what's happening right now. That's what the meters are telling me. So if I hadn't been watching the trade, I can just look in the meter and say, okay, we're roughly balanced, and the last block was on the buy side, and it wasn't very big. I know everything I need to know. There's no trade here. That's it.
Your tapes, Jeff, are reconstructing the original from the trade, from the IDs from the exchange, right?
This is using, I'm using the CME reconstruction algorithm. So yeah, this is not just time and sales. That's useless. You have to reconstruct either with one of the proprietary algorithms or with at least the CME's algorithm. And that's what I'm using here. Okay, let's see.
Gary's got an interesting question for you. Yep.
How do we know if there are sellers down at the bottom or if they are exiting their trade? We don't. And why do we care? We don't, Gary. It's, again, we don't care. This is one of those things where a lot of the order flow videos and, you know, get rich quick indicators tell you that things like that matters, and they don't. What matters is the result of the attempt to push down. Remember, it's an auction. So we got to the low and we pushed down on a few blocks, took out the lows, and then a couple of buying blocks came in and we went back into the range. That's all that matters. If you were trying to get long down there, the time to do it would have been the minute that block jumped in at 57. And so you would only be up a quarter here. So the other option, you could have tried to fade the low, but it would have been real easy to get run over down there. So right now, that's not a good trade either. By fade the low, I mean buy it. So you can't just look at it and say, oh, that guy was buying or that guy was selling, therefore I can do the following. What I was saying, that the bottom was orderly because there was sellers that ran out of gas and then we went back up. That's what I was saying. It doesn't matter to me if they were selling to close positions or selling to short. The selling in general, the collective selling stopped and buyers came in. And again, the Furu world on Twitter and all the magic indicators try to convince you that there are magic ways to read this stuff. And there just aren't. It's just a matter of experience, learning how to read the behavior of the tape. It was whatever tools you want to use. But to be able to say that, well, you know, that was a buyer or that was someone closing a trade and that matters. No, it doesn't. And no, we don't care. Okay, so hopefully that elaborates a little bit for you. I don't care if they're exiting. I don't care if they're shorting. All I care about was what was the result of the auction down there. And the result was it got bought and we came right back to approximate value. that making sense, Gary? I'm trying to give you a good answer without. In the boot camp, we go through this in a ton of detail. And in TRG, we talk about this a lot. It's a balance of reading the structure and reading the price action that gets you that. Because you don't, Gary, the market doesn't say to you, oh, if this happens, go long. And if this happens, go short. That's kind of like making a sandwich. Okay. This is JVC, our community manager. I love this example. A lot of new traders think that trading is like making a sandwich. You walk up to the counter, you take out 2 pieces of bread. You get a piece of bologna, you put the bologna on the bread. You get them step by step, in other words. But my point is that it doesn't work like that. It's gestalt. So it's much more like an example is driving. If you get into the car, you're not saying, okay, that guy's stopping, that guy isn't. You're looking at everything. And you're making a risk assessment at any given moment about whether you should continue going the direction you're going or you should put on the brake. That's what you're doing. Trading is exactly the same way. There is no magic signal or magic sequence of things that will tell you this is a long or this is a short. At that edge of the range, if you look here on this LRC chart, this will give you a good example. That was a push of the range. It was the edge of everywhere we had traded. So on that basis alone, you could have got along because right there at that edge, as long as the sellers didn't overwhelm you, you could have got some points. So what would that have looked like? Well, look at it crunched together here. Let's look at them all on roughly the same time frame. And again, there's no magic indicators here. All these numbers is the volume. That's it. And the bottom is just the delta. Did the trade go by on the sell side or the buy side of the tape? That's all those are. So right now, there's no heavy selling or buying action. It's very balanced. But we got down to this point on a big sell. 900 contracts pushed that down there, okay? And then literally everybody stopped selling. So it doesn't matter whether they were covering shorts or they were stop shorting or whatever they did, it ended here. So that was a low risk place to get long, at least for a scalp back into the range. And now we're at the top of the range, but we're seeing some more selling. So this would be a place you would exit that scalp. That would be a really simple example. Hopefully that makes sense. And I don't care what price point this is. It doesn't matter. It's the behavior that matters. And that's all there is to it. You don't need anything else. These lines are being drawn by linear regression indicator, which is included in almost every platform. It's not proprietary. And all I'm doing is measuring the range using a linear regression. It's 2. So basically 2 standard deviations is all I'm doing here. And I'm measuring it over 2 different periods. And that's how I scalp.
And additionally, Gary, this is one of those things where it's about practice. And over time, stuff eventually, like driving, turns into blinks, where you don't have to really think about the process of what you're doing anymore. You just do it. And it becomes second nature. But it takes a lot of time and practice.
Yeah, and a really good example of that I can give you personally. I've raced cars and motorcycles, and I drive on the street too. And when I was younger, one of the things that became really important for me to constantly remind myself when I wasn't on the track, I tended to be really lackadaisical and not pay as much attention because I wasn't going 150 miles an hour or whatever. And I realized very early on, because after I had got old enough, and in my day, you had to be 25 to do that, I took one of those defensive driving at a racetrack classes at Sears Point. And they let you do all kinds of crazy things like drink and drive, and they show you how impaired you get. And anyway, I realized just how likely all the other drivers were to be incompetent at any given moment. And from that moment forward, I pay much more attention when I'm driving on the street than when racing. Everybody, they at least have some skill level and whatnot. They have to have a license to be there. And a license to drive a car on the street is like a birth certificate. You just have to show up to get it. So that's a good example. If you can make it that mechanical, scalping is literally that simple. It's like driving. You just sort of do it, but it doesn't get that way in a week. And a lot of people misunderstand how long it takes to get good at trading. They think, well, I've been practicing for 2 years or 18 months now or 6 months with my new magic algorithm that trend trades for me, and so I should be ready to trade real money now. And it just isn't like that. think about all the big players in this game, how much more experience they have, and just think literally of any profession. Is there any profession you can master in in a year or 2 or 3? There's none. So you really have to be prepared to learn the nuts and bolts on why markets move and then practice. And that's the key to it. And, everybody in TRG will tell you that. They all do it. They're all at various stages of success with it. I think it's a little different than the stuff you're used to hearing, but it's the truth. It's the reality.
Jeff's got an interesting question for you.
Okay, let's see.
I'm curious to hear what you have to say about it.
What instrument gave me the upper hand in finding my aha moment in my trading career? That's a great question. I'll tell you what, for me, it didn't work like that. I've been at this a long time. I started when I was 13, which was 1973. And by the time I was in my 20s, I was trading OEX options. And you had to call orders in those days. There was no internet, no cell phones, nothing. And so I learned a lot about price action by trading the OEX, which were the mid-cap options. And because I had done well trading other options, I used to buy options on buyout candidates. That was my 1970s and 1980s strategy because of all the leveraged buyouts, Carl Icahn and Wall Street. That was all going on. And so, you could look for companies that had assets that were on their books at low values, which is what the leveraged buyout guys did. And, if you could find decent option plays on those, they were lottery tickets. So that strategy worked really well for me until I got in my early 20s. Then I started trading OEX options. I lost a lot of money in one day doing that. And I learned a valuable lesson about developing a process. So the short answer for me was that it wasn't an instrument. It was realizing that if I mastered my technique, that I could pretty much trade any market I wanted to. And after that, I've traded oil, I've traded gold, I trade the indexes. My favorite instruments are the indexes because of the correlation you can see. The US indexes, in other words, RTY, ES, NQ, YM. And then I also trade gold futures and oil. I used to trade the oil crack spread, which is the difference between crude oil and refined gasoline, or RBOB. RBOB is the symbol. That was fun because, for example, let's say the Suez Canal thing happened, or some refinery blew up in California or in Oklahoma or in Louisiana. The price of gas would often respond to that, but the supply and demand wouldn't necessarily change right away. It would just be, speculation that there would be a supply squeeze because of the refinery crashing or whatever. And so there was a lot of cool trades you could put on just getting in the middle of that speculation. And so that's called the cracked spread. And it's a real fun trade. NYMEX. Anyway, so, for the last 20 years, I've really traded nothing but the futures. I trade ETFs, leveraged ETFs are kind of my swing trades. But that's really the only equities I trade regularly. And, futures are so tax advantaged, you pay much less income tax. And there's a whole lot of other things you can do in the futures market you cannot do with equities. So that's pretty much why. There really wasn't an aha moment for me on any one instrument. I would think the biggest aha moment, or the biggest kind of epiphany of here's a good idea. We're going to get another ledge breakdown right here, I think. Watch the low, see if that goes. Let's see what's going on correlation-wise. Okay, so RTY and YM are also near the low. So I'm going to guess this low is going to go. Let's watch it. We should see a whole bunch of selling hit it. And then we'll see if it gets bought like last time. Maybe there'll be a long or a short here. Anyway, so the futures have really been my go-to animal, for all the reasons I mentioned. If you want to make money trading, the futures are the way to do it. There's just no other answer to that. Nothing else has the markets that are as transparent, that has the tools that are the best, the platforms, the brokers, the leverage. Anybody trading in FX or in any other markets is silly, because you're just putting yourself at the mercy of all the things wrong in the financial market. If you like FX, trade FX futures. The currency pairs are, that's just pure suicide trading those. Yeah, you can get lucky and make some money, but the information's just not good enough. You can't do order flow because you can't get accurate information from the brokers and the dealers. A lot of it's made up. The dealers make their own markets. All of that is just adds up to a shell game. It really does. I'm not saying they're not legitimate markets, but they're not legitimate markets for individual speculators. Individual speculators are cannon fodder in those markets. Oh, I love that. Pretty good at driving right away. Trading is harder. Yeah, I was too. I was driving when I was a little pup. I started building motorcycles and mini bikes when I was 11, and I had my first car I was building when I was 13. So I totally get that. Trading requires you to have a really good understanding, in my opinion, of pattern recognition. And driving has some pattern recognition in it. For example, finding the perfect line through a turn. That's about geometry and pattern recognition. But have you ever raced, Lance? You said driving. Have you ever raced motorcycle or car? In competitive a bit. Okay. So the thing that's different, all right, the thing that's different in racing on a track is that you have all the other drivers to compete with. And so I think in that sense it's like trading, because you have to constantly assess what the other people are doing. And I don't mean to try to do that to say, like, was that guy at the low a buyer or a seller? I mean, looking at it collectively. What's the collective competition at the moment? So right now we're getting bought. Okay. So that low didn't get pushed, and there's a little bit of energy coming in on the buy side, but it's pathetic. It's anemic. So no trade. There's no long, no short. There's nothing to do here. But we are, there's more energy on the buy side than the sell side. That's why, these guys are above the halfway point. That's what that means. So, but the numbers on them are really small. This is really light volume. So that's not the kind of momentum I would join. What kind of momentum would I join? That's a great question. I look at scalping first by direction. I have to have a dominant direction to play. Right now we don't. Then I say, is there either momentum that I want to join, or is it at a spot where it might be a high volume reversal of the momentum? And right now we have neither. So that one's a fail, so there's no trade. And then the third question is, if we do have some momentum, are we near an inflection point that might give us a trade? So let's say we were moving down right here toward this low. So I'm going to take another shot at your question, Gary D. So let's say we were moving down toward that and we had a little bit of momentum. That would be the kind of thing where I would say, all right, the odds are pretty good. We're going to take the low out, so I might join it if there was pretty good momentum. Or I would say, we're probably going to take the lows out, but we're probably not going to go anywhere after that. So I might be looking to buy down here, say, after the momentum dries up. I wouldn't necessarily buy there, but that might be a spot to try. I would see where it dries up, and then I'd come in. And that's what I watch here on the range. So right now, the low of the range is right there around 55. We're kind of near it. It's been threatening to break this low a few times. It might do it, but, Sundays, there's not a lot of momentum. So that's kind of how you evaluate that. At the inflection point, it could be interesting, but I kind of want to know what I'm going to do before that. It's kind of a very retail thing to jump in right at a ledge break. You kind of want to be with it before it gets there, and you do that based on the momentum. And right now, we don't have down momentum. In fact, we have up momentum. So, there's no trade down there, and there's no long here either. It just doesn't have enough energy to join. So we sit on our hands. It's that simple. Okay, let's see. Nervid, I think the peripheral vision always helps in driving. Oh, yeah, absolutely. And trading is like that. Absolutely. Correlations are like 3D vision. You nailed that. They're like your peripheral. I have a really good friend, trader, first name of Dennis, who goes by C3D. That's his handle on all the trading forums. You may have seen him around. He's a good guy, lives in North Carolina. And that's his view, is that technical analysis and order flow, it gives you the three-dimensional view of the market, and you have to learn to think that way. You can't think in terms of, this indicator crossing this indicator, or, the MACD crossed up, or, we're at support. So, that stuff is just all nonsense. So one of the things you learn if you're racing is that your peripheral vision kind of comes in. You learn to understand where everybody is around you without your peripheral vision. It becomes a little bit of a sixth sense. So Yeah, helmets do, particularly full face helmets, cut off a lot of your vision. And I got to tell you, and I've had a stroke, so I have no peripheral vision at all anymore. But if you're in a race, you develop this sixth sense about where everyone else is. In cars, you've got a lot of mirrors and whatnot. It's a lot easier. But on a motorcycle, the terrain is rough. I raced motocross and desert hare and hounds. And, motocross, you're moving around so much and everybody else is moving. So looking around, by the time you look, it's too late. So you just have to get a sense and go with your gut. It's a very spidey sense kind of thing. So look at this. We're pushing back up again. That's interesting. And we're up in that inflection area that if we can push through here, this high volume, we'll probably retest the highs. So that's worth keeping an eye on, the high of the session, not the high from Friday. All right, let's see. I got a private question. Please don't ask me, no problem, Rob. Please don't ask me to answer questions privately. Please put them in the public chat because everyone will want the answers. So this one, is there any point to looking at open interest on the option side? I don't think so. I find no edge in that. I know a few people that use it to kind of determine a big picture bias. My partner in this business, Lee Harris, does that a little bit, but even he would tell you that he doesn't consider it to be any significant edge. It's like the supply of contracts, but the change in that during the course of the day is much more about buying and selling. It's not about contracts being retired or created, which is what open interest is about. Hope that answer makes some sense to you. I think we can rename you if you're not allowed to do that. You might have another user of but I'm going to go ahead and name you Rob UK. Okay, does that work for you? I can do that for you. I think I just did it. You're now Rob UK. How about that? Okay. So no worries, you're welcome. And good question, by the way. There's a lot of stuff out there that either was an edge years ago, and a lot of people still sell it as an edge because they can make money, or it's such a subtle edge that it's really not that useful. Like market internals, the advanced decline is a good example of that. I used to use that as a significant edge during the trading day. Now for me, it's nothing more than a filter of the bias conditions. And here it is from Friday. This was the close of the internals. So advanced decline closed right at the peak. You could have seen that ramping up, and that would be one of the reasons you join the momentum at the close. The tick closed negative, but the cumulative tick closed way up. So, those are signs that the bias was to the buy side. But again, during the day, it can be deceiving. Back in the day when they did program trades in the early 2000s and the 90s, that was a lot more useful. Internals. Okay, so let's see. Okay, I'm caught up on questions, I think. If I missed a question, let me know. I don't think so. Yes, Mark, it was the Bob Bondurant School of High Performance Driving. That's exactly right. Did you do it too? It was a blast. Cost a couple of grand, and over 2 days, you drove all these race cars and learned how to control crashes and turn around at 60 miles an hour. And then the last day, they did a drunk thing where we went out on the skid pad after 1 beer or 2 beers and 3 beers and measured our response time and could we drive through the cones and all that. And it's stunning how bad you get quickly. Very interesting stuff. Yeah, that was fun back in the day. You did not? Yeah, they have similar stuff now. My nephew just did one. At Porsche has a driving school somewhere in Southern California or Arizona, and he just did that at their school. It was fun stuff. The good old days, right? I was into muscle cars in high school, and then in college and after that, I was into C-class sports cars. And then I just, after breaking my back a whole bunch of times and having a stroke and a whole bunch of other things, I decided it was probably a good time to move into less dangerous hobbies.
That was what I was wondering, Rob, was what did they do in that test for people who didn't drink?
Oh, you didn't have to do it. It was just you could do it if you wanted to.
Sure. No, I mean, I would be just very interested to see the difference, but I don't drink. Yeah. So if they handed me a beer, it'd be like, sorry, no, got something else.
Well, if they can test it with any substance. I mean,
oh yeah.
I think I told you guys in TRG, I was part of a study that was similar, that was very recent, that tested drivers with either cannabinoids or alcohol in their system to compare the impairment. Mm-hmm. Mm-hmm. And the study's thesis was that it affects different drivers very, very differently. And that was actually proven in the study that I was in. Alcohol, I was useless to drive. And I'm one of those people that's odd. With cannabinoids, certain strains up to a certain point, my driving actually improved because it helps me focus. And then with other strains and with larger amounts, then that's when impairment would show up. It was very interesting. They tested a whole bunch of things in that. And I would love to see some more studies like that, because one of the things going on all over the country is that the police departments don't know how to measure impairment, nope. And there's legal cannabis everywhere. And so, there's a bunch of systems that are bad ideas, and there's a bunch of them that might be good ideas, but we don't know yet. So it's funny because I got pulled over once for DUI, driving impaired, and I wasn't on anything. I had a blood pressure problem, and I was actually driving back from the doctor who had just screened me for it. And so they pulled me over, and the guy says, can you get out of the car? And I was like, sure. And he pulled me over for a broken taillight on a rental car. It was a rental car. So I get out and I stood up, and when they're giving you blood pressure medicine, until you get used to it, if you're of a certain age, you'll know this, you stand up and you instantly get lightheaded and you can faint. And that's exactly what happened. I stood up in the car and I passed out. So they instantly thought I was on something, and they did a blood alcohol, blood breathalyzer, nothing. There was nothing in me, and they couldn't figure it out. And I was like, guys, I'm telling you, it was my blood pressure. They just wouldn't accept that. So the cop finally, he after a big conference with all the other detectives and supervisors, he didn't want to, but they forced him to book me. And he was actually a really nice guy. So this was in North Carolina. Anyway, it was dismissed shortly thereafter. As soon as I got an attorney, it was, ridiculous. But they were trying to get their quota of arrests for that. And there was a big DUI problem in that part of North Carolina. It was just outside of Cary, which is outside of Raleigh, the Research Triangle Park area. So I don't blame them. And I got to tell you, that cop was so nice. He's like, my boss is forcing me to do this. And I was like, I know, I get it. I heard him. He's like, he said, I just thought you were tired. I didn't even think you were on anything. And I said, well, it might be this blood pressure stuff. And so anyway, one of the stories. You know what? I'm watching this now, and it's picking up just a little bit. The last two swings were a little more energy. I don't know if you guys noticed that, but we're still not going anywhere. So, it's still being negotiated. This is what's happening here. The market is still litigating whether they want to go up or down.
You can see the bars thickening up a bit too.
They are, yeah. And look where it's happening. We have an inflection point here. And as soon as we start to leave the edge of the range, the momentum picks up until we get to the other side of the range. And then the sellers come back in. So right now they're literally just doing the 8-tick dance there and trading the short-term range. And this is the normal behavior of ES. NQ does the same thing with just a little bit bigger ranges. That's all. So you just kind of let it do it. You can try trading the edges, but the volume is so light. It's just not good odds in that right now. Oh, yeah, I know Asheville, Todd. Yeah, it's gorgeous down there. All of North Carolina is gorgeous. Asheville's actually near where my buddy lives, the one I was talking about, C3D. He just built a house way up in the boonies out there somewhere. Okay. Absolutely. Lance, that's correct. Certain ones particularly. Let's see. Is there any difference in Sierra Chart's LRC template and NinjaTrader? JVC, you guys have fooled around with the LRCs in Sierra. I haven't. Is that? Can you answer that one? They can do Sierra the same way.
Let me go back and reread. Make sure I'm not missing
Jeff
things.
Fielding. It's a 348.
Yep, I see it. Yeah, I mean, I'm not sure what sorts of differences you might be referring to.
Can you make them do the same things?
Oh yeah. You could definitely make them do the same things. They have slightly different names for stuff, slightly different features and options and little tweaks here and there, whatever. But for what we do with them, absolutely, they can do the exact same thing.
Cool. Okay, so let's see.
From Tariq.
I'm in a 5-handle range. I'm not sure what you're asking me, Mark. Again, guys, don't send me private questions. There's no reason to do that. I'm happy to answer the questions publicly. So put them in the main chat, and please try to elaborate just a little bit on your questions. So I'm in a 5-handle range, Mark said. I'm not sure if that's a question or just a comment. The range that I use is based on the LRC, which it varies. Like right now, it's about 4 handles, give or take, but it's assessing that real time. It's calculating basically a regression channel with 2 standard deviations. That's all I'm doing.
So Mark, you ended up private messaging me instead, but he said meant ES is in a short range.
Yeah. The standard story, what Pete over at Jigsaw, Peter Davies, he likes to call it the 8-tick dance. The ES tends to stay in a 2 to 4 point range, 2 to 4 handle range. So 8 to 16 ticks ish. That's you could use that as a range instead. But my way of using regression is dynamic. And that isn't dynamic. That would just draw a line at those lines. So, this is a more accurate way of gauging the current range, but those are typical, yeah. So let's see. Tariq, cool, thank you. Hi, welcome. Do you feel the ES footprint is clearer than MES? It depends on what's going on. We talked about the Suez Canal earlier. I think it's priced in right now. Number one, if something changes, then we'll see it repriced. As far as MES and ES, I use them interchangeably. During the regular trading hours, I will typically trade off the ES dome because that's usually what I trade. But I've just got it running tonight on the MES because it's night and we're doing a class. It's not going to look substantially different. I can bring it up for you if you want to see it. Here's the ES. That was the MES. It's going to be pretty much identical to it right now. So it doesn't really matter which one we use. There it is. It's a really similar profile. There's a little bit, one high volume node up there that's slightly different, but other than that, same story. So I don't see a huge difference, particularly on Sunday nights. There's actually some fun stuff that goes on in the micros on Sundays. There's some algorithms that like to play. And so I like to play the micros on Sundays to kind of play a game with those algorithms. If
your little algo friend hasn't been playing tonight, has he?
No, this isn't the conditions they would play under. It would have to get quiet before they'll play. We need a quiet, tight range, and then they'll play. And I don't think we're going to get that right away, but if we do, I'll point it out. Those of you in TRG, I pointed this out in the Sunday sessions a lot. If you go back and watch any of the recordings, say a month or two ago from Sundays, we pointed out some examples of those guys. There's some guys that run this 100-lot algo on Sunday nights in the micro ES, where they just basically sweep a few price levels, take out some retail stops, and then they go right back the other way. And you can see it. It's a 100-lot trade, and it goes by typically in blocks of 10s and 20s. If you watch, you can put a micro tape on, or if you just watch an MES tape, you can see when it's happening because they'll balance it. So keep an eye on that. I don't think we're going to get it right now. We might not get it tonight, but it's a fun one to play if those guys show up. I can open up an MES tape too if we need it. But right now, I don't see their behavior. You can watch them right here. Just FYI, if you're not familiar with Jigsaw, what I'm seeing in the middle here, these are the bids and asks. So that's the size in the market. Those are orders, not trades. The stuff that I'm highlighting in blue and pink here, those are actual trades getting filled. The ones on the outside are getting reset every time it tests the price. The ones in the middle are accumulating. So that's called the current and total trades in Jigsaw, or in Sierra, it's called the recent and current. And basically, I let that accumulate until I want to reset it. And you can kind of see what it will do here. It'll show you the total delta, since you reset it the last time, and it'll show you the trades going by on the sell side and the buy side. I can reset those separately so I can, kind of build a mini footprint. So that's where I watch most of my price action, is on that footprint right there, and on this price action 15-second bar chart where I'm looking at the order flow. So that's pretty much my methodology. Sometimes I will put these guys up, as I said earlier. In the overnights, they're not as useful because the market just isn't as structural. So let's see, where's the other one? Oh, that should be it. Yeah, so it's just another way of viewing it. I prefer watching it this way, at least at this time. So just so you guys know what you're seeing here. So you can see as this trades, you can see a little bit of momentum. It highlights the momentum in blue or red as it's going one way or the other, and it's filling in the trades on the middle. So we're seeing, high volume nodes as they're forming. So that's how I use that. Yeah, I'm running 2 LRCs, but the only one I'm paying attention to for range is the longer term one. We talk about that in our boot camp. If you want to learn about that, we spend 2 weeks on that, and then we spend 2 weeks on structure. The last full boot camp of this current format that we have is going to start on the 6th of April. If you guys are interested, this is it right here. We've got some new material we're adding to it on correlation as well that we haven't taught before. And this is where you can sign up if you're interested. That starts next Monday. So I will put that link in the chat.
If any of this stuff resonates with any of you guys, by the way, I mean, just speaking as a TRG member, because I was a member for quite a while before I joined as the community manager, I can't recommend it highly enough. So, but it's hardcore. I mean, don't think this is just a lightweight kick back and watch a few videos or something. I mean, it is intense. So
we meet 3 times a week for class. We meet other times during the week for live sessions. There's, let's see, we have 3 2-hour sessions a week. So, and then the live sessions on top of that. And it's, as I said, you can look at the curriculum on that link I posted. The first 2 weeks are all about this scalping methodology that I use. And there's also a bunch of TRG people in the room right now. Feel free to ask questions and they can share their experience with you. We've been doing this for a couple of years and real pleased with the success of our students. Awesome, Joe. Looking forward to that. What were you saying? Here we go, Rob. You thought we were breaking down on the lows? It looked like it was going to. Well, the NQ is moving again, but it just hasn't gotten any downside energy. That's the problem. Yeah. Do you know Lee is from UK? He's our my co-founder and the other partner, and we have a lot of UK members. And I know all you guys in the UK know each other. So I actually was married to a British woman, and I lived both in London and the US for about 3 years in the late 80s, early 90s. Yeah, Lee's a great guy. Lee teaches the structure portion of our boot camp, and he's our structure expert. I understand it, but not on the level that he does. And when I say structure, I'm talking about this kind of stuff, the 30-minute footprint structure during regular trading hours and the setups around that. And I focused the first 2 weeks on price action and learning to read tapes and the DOM. And we've added to this upcoming boot camp a whole new session that we didn't have before on correlation, how to use correlation. I used to think it was too advanced, but I think I can squeeze it in now without blowing everyone's head off. We push a lot of material out over 4 weeks, so it's a fire hose of material. You'll be overwhelmed, but I promise you will learn something. So let's see. These days you use mostly ladders and tapes. Yeah, I do too, but there's definitely some advantage to understanding structure, particularly during the first 2 hours of RTH. Yes, Lance, there will be a TRG member event in April that will be dynamic range video game and structured scalping. That is in the works. that will be kind of the prerequisites are going to be the first 2 scalping courses that are in the library now in TRG, which I know you just watched. So it's going to be kind of the next thing after that, how to interpret NQ and ES. And I don't have an exact date for that. Again, that's probably going to be mid-April. It will be TRG members only. That will not be a public event. And I will talk more about that probably in the Ides of Monday tomorrow or the week following, once I've got it nailed down. That one I'm going to do for sure. The ETF one I want to do around the same time as a public course, but I don't know if I'm going to have it ready in time. I'm forcing myself to pace myself for the next few months because I have this habit of overworking myself and then getting sick, and that's what just happened. So I'm trying very hard not to do that anymore. So what other questions do we have, guys? It's where are we at? 4 o'clock. So we've been going a little over an hour. Yep. Generally, I let this session go for a while. Sometimes I'll take a break and just let you guys talk and let somebody else host. If anybody in TRG wants to do that. Tonight, we'll see how it goes. We'll see what kind of action we get. At the moment, I still think the lows are going to go, and I might even buy it if they do. But at the moment, it's not really giving us a good opportunity. There's just no momentum at all. Let's see. Yeah, I agree, Lance. You can see it in an uptick and in the tape long before it even shows up on a 15-second chart. That is why I love looking at correlated domes like this. But it can be distracting too. If I'm just trading structure in the ES, then I don't pay as much attention. If I'm just video game scalping NQ, then I don't pay as much attention. But if I'm looking at a correlated market and, for example, I'm fading the edge across the board or I'm selling the edge across the board, then I love this view. I totally agree with you. For scalping NQ and ES, I think this view that I had up earlier is more useful. If I'm just trading NQ or ES, this gives me a little bit better idea where to lean on it because of these are 3-minute footprints, by the way. So basically, I'm just consolidating what I'm seeing here in 3-minute bars, and that's what these are. And there's nothing magic about the 3 minutes. It just shows a good consolidation of recent activity. And that's all. There's nothing magic about anything. Nothing you're looking at is proprietary. That stuff is all mostly nonsense. There's some good proprietary tools that can help you see inflection points like Lee's emoji stuff, but no indicator is going to teach you how to trade order flow. You got to learn to read the action in the price and in the tape and in the footprint, and then from there you can determine good strategies and then the tools become useful to you. But the tools themselves aren't useful until you understand the concepts that they're displaying. And that's a really common misconception. You know, people think, oh, I can just buy an indicator that'll tell me to sell here, you know, based on the order flow. And it just doesn't work like that. It can tell you that there might be good odds to sell there, but that isn't enough information. You need to know more than that. So anyway, end of lecture on that. Never hope that anything is going to happen. I see you wrote, hope ES going down, Rob. Hope and pray are not security symbols. If you're hoping something's going to happen, then you're in a trade that isn't happening yet, or you're making a mistake. Don't ever think that way.
Sounds like someone might be short.
Yeah, hopium. Yeah, if you're short and you're thinking that way, that's a horrible bias to have right now. It's gonna affect your ability to execute. This could turn out to be, we could take out the lows by a few ticks and we could get a long entry here that could just rock and roll all night. So if you're thinking with a bias like that, I got to tell you, you're making a mistake. I'm not saying that up or down is right or wrong. I'm saying having either as a bias is wrong. That is because of DXY, you said. Okay. That's nice. How is that an edge for you at the moment? Why is that giving you an edge? Explain that edge to me, please. I'm not saying it is or it isn't. I just want to understand. So DXY is causing you to be short ES or because it had a gap up? Is that what you're saying to me? While I'm waiting for you to answer that. Dan, do I look for bonds for correlation? No, I don't look at the bonds at all or the notes. I know a lot of traders do. To me, it just isn't, it isn't significant enough of a correlation. If you look at, correlations, this is a good place to look at them. I'll give you a resource for correlations. It's just not strong enough to really trade. The best ones are just the way that the correlation occurs in the indexes. That's the best correlation there is. Oh, you're talking about the dollar and correlation to equities? How is that an edge in the futures on a Sunday night? If anything, it's just going to confuse you. Why would that affect it? You could do that. Yeah, Lance. Lance wrote, if you trade bonds, you should look at 35, 10s. Again, I don't want to comment on bond trading strategies because I don't trade the bonds. One of the guys who's really good at that is Grady, John Grady. Good place to learn about that. The bonds move ridiculously slow. I don't have patience for it. It's that simple. So I won't comment on it beyond that. So here's the correlation resource that I just shared. So have a look at this, Rob. Okay. Compare ES, YM. Look at the ones they're highly correlated to. What do you got? What are the answers? Well, ES and YM are at 73% right now, right? Boy, look at ES and NQ, 52% in the last 30 days. It's crazy.
That's crazy low.
Yeah, these are really unusual. If we look at the 60s, they'll be much higher. Yeah, look at 60s, 86%, 45. Well, NQ's diverged for a while, so that doesn't totally surprise me. The Russell and the ES correlation's 90% right now. So that's pretty damn good. So anyway, that's how I do that. That's why I look at all the indexes, because the correlation's just really consistent. Okay, so we're testing the lows right here now. So this is a good spot to watch. We could get a breakdown, maybe catch a long or a continuation. As I said, there's no reason not to believe we couldn't fill this entire, move up that we got at the close. But I wouldn't have the bias that that's going to happen. That would be a horrible predisposition to have in this market. You're short from 39, 56, 75, okay? And where's your stop, Rob? So you're short from right there. So you have almost 2 points in here of profit. And you're 56.25. And you're not taking it with the market at the low of the session and buyers stepping up. Okay? That's, in my opinion, you're making a mistake. You're going to give profit back doing that, regardless of whether it goes down tonight. It goes back and forth. Just sitting in a position based on a preconception is a mistake. That never works out well. Okay, anyway, what other questions do we have? So what you're saying to me, Rob, is you've got 2 points of profit now, and you would let it go back to 2 ticks of profit before you'd admit you're wrong and take profits. Wow. Okay. Yeah, you'll give up 8 ticks for 2 ticks, and ignore the price action. You'll just get married to the price level you're short at. Okay. If that's working for you, great. Kudos. I don't see how it can be, but whatever. All right. So what other questions or comments do we have, folks? We're going to go maybe another 15, 20 minutes, maybe another half an hour. Unless the tape gets busy, I'm going to wrap this up because we have our Ides of Monday session for TRG at 5:30 in the morning. And then we have our scalping group at 6:15 in the morning tomorrow. And then, of course, the open at 6:30. Those are all my time here in California. So...
This was a quieter reopen than I was hoping for.
Me too. I think everybody showed up and nobody wants to stick their neck out. So,
Right.
So odds are we'll do what we normally do on Sundays. We'll push one edge of the range. We'll go to the other edge of the range, push that. So, yeah, I don't think that there's any preconceived energy that we're going to go one way or the other. I mean, you could certainly be short here. It's not a bad idea, but it's a swing trade. It's not a scalp, and there's no way to manage your risk. You're going to end up going back to break even or a couple of ticks. And to me, that's just a waste of good profit that you have in your pocket now. So that's my opinion on that. But I won't debate that it's a reasonable swing strategy to be in the short here. I won't debate that at all. I would just trade around a core position because the odds that this low is going to hold right now are pretty good. I mean, it's getting bought. So we'll probably go back up into the range. And so that's that. What setups do I trade overnight? I trade the same ones I usually trade, Lance. I'm just, if you remember my playbook, I tend to only look at the extremes because it's hard to get good entries without looking for extremes. So it's all the same stuff, but you'll see a lot of comments about watching the overnight, watching for extremes in the overnight. I say that quite a bit in my playbook because that's, you just don't know. The volume can go one way and seemingly be like a great setup. And then, somebody puts on a big position or takes one off and we go the other way just as aggressively. It's too thin to really get committed, in my opinion. Okay, Todd, thank you. We'll see you in the morning. Oh yeah, ledges. I love ledges overnight. If this ledge looks like it's going to go, I'll join it short. It just hasn't happened yet. There's, if this was going to go, why are we 2.5 points from the low now? And Rob UK is just gave back all his profits. Sorry, Rob. I hate to say I told you so, but this is why learning order flow might be good for you. You wouldn't have given back that money. I'm saying it with love. I hope you understand that.
There's nothing Jeff hates more than giving back profit.
Yeah, it's just there's no reason to do that. The market was telegraphing to us that low was going to hold and that you were going to end up getting stopped out as you just did with 2 ticks. So that's cool. But, I can teach you to not do that if you want to learn. I can't teach you tonight, but I promise you I can teach you that. I can teach you in our boot camp how not to make that mistake. Okay, that's fine. Okay, Rob, then why are you here? You don't need anything I have to teach, and you're already making tons of money. So, you should run your own session. All righty, I'm pulling your leg just because having a commitment to to a direction like that is just really dangerous. You could be a really good trader, but that tells me that you're an emotional trader because you're not trading the price action. So anyway, you're trading a bias that you have right now. So what other questions or comments do we have, anybody? Open Q&A for another, we'll go another 15, 20 minutes. Yeah, I did that for a long time, Lance. Learning the first rule of being a good professional trader is that you have absolutely no bias. You can have an edge, you can have a price that you're looking at, you can have risk reward in your head, but having a bias is just pure danger. The market will tell you which way it's going to go. Order flow is really good at telegraphing that. And at the moment, it looks like we could have a decent down bias, but the point of just sitting in a trade makes no sense. It makes much more sense to enter at the inflection points and take profits when you got them. Why, when you're in the market, you're at risk. Why leave a trade on? Because that leaves you at risk when you can cycle in and out, take profits, and not be at risk. That's my point. There's no reason to take the additional risk of leaving a position on when you do not have an edge. And right now, I don't see a swing edge. I could see one if you re-enter, up here, but, unless the action gets overwhelmingly one way, I don't see it. That doesn't mean I'm right or wrong. It's just that last example was a good one where you could have cycled that trade based on the price action without having a bias and still made money and re-entered again up here. So anyway, yeah, exactly, Dimitri, that you nailed it. Having a bias and strategy are two different things. That's perfect. Again, spoken from a guy with 25 years of pro trading experience. So that makes sense. Okay, so let's see. Yep, I get it, Lance. I know a lot of people in that boat. Yeah, it's about being right. It totally is. And again, there's no reason to predict the future in the market. Rob, the market will tell you what's going to happen. Trade's about to happen. That's what order flow tells you. That's what white coffee and order flow, which is just wave volume. It's another older form of order flow. They all tell you what's going to happen next. So trying to predict the future is very dangerous.
But it is possible to predict the future with remarkable accuracy, but only in the extremely short term.
And that's the whole point. If you base your entries on the short term, in the intermediate terms, you'll always be right because you're protecting risk. You're not trading the bias. You're trading the risk. So for example, right now this is getting bought again. So another cycle up here to these previous areas that were sold would be an interesting place to try to put a short on. If it starts getting sold again up there, and then you'd catch another 4-point or 3-point trip back down to the lows. So you could have cycled this 2 or 3 times instead of just sitting in a short waiting for it to work and getting stopped out with a 2-tick profit. So that's my point. Yeah, my through rules, Lance, are don't lose money, always take profits, and good trades tend to work right away. If you're sitting in a trade waiting for something to happen, one of 2 things is true. You're early or you're wrong. So if this is the short of the century, Rob, you're early. So why sit in it? Why not get better entries and scalp it until it fulfills the promise you think it has? Okay. I'm not harping on you. I'm just trying to explain the point. I didn't want to just jump on you. So cool. It's I'm not picking on anyone. I sometimes get accused of that. I have a very tough love style of teaching because I want my students to succeed. That's why I'm here. I don't need to do this. It's not for the money. I love teaching. I've been doing it my whole life. So I make much more money just trading than trying to watch the market and trade and teach at the same time. But this is much more fun. So at least right now, in this point in my life. I appreciate your sense of humor. I actually made someone cry once, Rob. I'm not kidding. And it wasn't a woman. It was a man. This was 2019 workshop I did. He's not a successful trader yet, but he's getting there. And he since thanked me for that, but he wouldn't speak to me for about a month because he just thought I was bullying him. And I was like, no, I'm just trying to get you to understand what you don't understand. And the only way I can emphasize it is to push you a little bit. Otherwise, you're good. It's like a trade. People stick with the trade even when it's wrong because, they don't want to admit they're wrong. And a lot of people have a lot of investment in their trading strategy that doesn't work consistently well. But because they've worked on it for decades, they have it's real close to them. And that makes it really hard to abandon. And so that's why we kind of teach that the best way to approach is with no tactic, no strategy at all. Learn the order flow and then develop new strategies from that. And some of your old stuff might be useful, some of it might not, but you'll know when you get there. Instead of trying to make something that doesn't work by adding order flow to it. I hear that all the time. And it doesn't work like that. You don't take your Renko-based trend trading system and just add order flow to it to make it better. That just doesn't work like that. By virtue of just using a Renko chart, you're literally not seeing order flow. It's masking it. That's by definition what Renko charts do, or any chart that consolidates activity. Tick charts are another good example. You can't see order flow on a tick chart because they consolidate order flow, and yet I see order flow traders routinely saying that. Oh yeah, I use tick charts. Now the only type of charts that make any sense if you're looking at order flow. Absent looking at it on the ladder is one's based on time because you're comparing time to volume. Nothing else matters. Anything that artificially compresses that or remaps that, Ichimichus or Renkos or any of that garbage. And trust me, I've studied it all and I've used it all for decades. It doesn't work anymore because the order flow data is better. you can make better decisions. So the people using order flow data don't need that stuff, and they are making better decisions. And that's why all that old stuff doesn't work very well. It's really quite simple.
And the people who tend to do the best in all of our stuff are the ones who can come in with the clean slate, the tabula rasa, and just, even if they do have all kinds of experience from before, they just temporarily put it to the side and just, take what comes. So.
Absolutely. That's so true. If you can just clear your brain and just go with what's happening. How did I know it was getting bought? Was Dan just asked. I watched it on the tape. We got down to we were 2 ticks off the low, and a whole bunch of blocks started to go by on the buy side. In other words, they were trading on the ask, which means the price was getting bid up. It can't trade on the ask if somebody doesn't bid it over there from the sell side, right? Or the bid. And so it's that simple. That's all there is to it. So right now it's getting bought again. The trades are going by over here. The only way that happens is if we run out of sellers and it moves up. That's no other way it can happen. That's why the tape is the ultimate authority. All right, now it's making another attempt to break down. It'll probably take this low out one of these tries, and it'll probably do it kind of aggressively. That'll be a ledge break. This could be it right here. And so an interesting tactic would be to fade that and see if it'll get back into the range. So maybe buying it here and here might be a good try. I'm not necessarily saying that's a good idea. We could blow through that and go to the 20s. But that would be an asymmetric trade. By the time it gets there, the odds are good we're going to move back into the range because it's kind of the edge of the range, not quite. The edge of the range is 53. So right about right here where I'm trying to buy is where the edge of the range is right there. Can you see that? I'm circling it. So we'll see what happens. That's an example of tactics you could use against this tape. You could also sell it here on the idea it's going to break down, but there's too many buyers to do that. You're going to get caught off sides trying to do that. It just won't work unless we get a lot of selling momentum, and we haven't yet. That's what I would normally do, is join the momentum before the ledge, but we're not getting those conditions tonight. If anything, buyers are stepping up here. Oh, all right, this is selling volume, and it's selling right there on the bid. That's what those are. So. And we went up a full 4 ticks off of that. So this is right now, this inflection point, the low is in play. So let's see what happens. I'm not going to predict which way it's going to go at the moment. The odds are it'll go back into the range, but it has some more downside before it's exhausted the range. So right about there is the edge of the range. So let's watch it. Okay, NQ broke down. It took out one low, and it's about to take out the low again. I think its low is right there. YM, RTY, there's buyers over there. So, boy, if we're going to break down really hard here, it sure doesn't look it. Look at all the green. So, you know what? I'm going to close these guys so we can just watch the tapes over here. So we'll trade MES, nothing else for now. I totally agree, Stephen. I had a fire sale for mine too. Some of the licenses I sold a few years ago to other people, and some of them I'd gotten their value, but I haven't used any technical analysis indicators now in 6 years, 7 years. Okay, emoji trading software is not indicators of buying and selling. They are visual tools, Dan, that help you see where there's buying and selling. But if you don't understand the core concepts of the order flow underneath it, the emoji software is not going to be useful to you as it could. Because you can't, it's not like the indicators you're used to where you just turn it on and it tells you where to buy and sell. You have to understand what the tools are telling you. It's a toolbox. It's not an indicator, and that's a big difference. Stack sell imbalances on a 15-minute footprint. Useless, total furu concept, stacked imbalances. Why? Because what's the percentage? What's the magic percentage? Why 15 minutes instead of 10? Why not 11 minutes? Yeah, that just is all nonsense, Rob. There are no magic setups like that. So, okay. All right, so we had the selling. We took out the lows. So far, no follow through, but no more up. We haven't bounced either. Here's some more selling aggression. At the moment, it looks like we're going to sell down, but I'm tempted to nibble long here just because it does not have any momentum. I'm going to throw one on long just for fun. And we'll just slap a target back up at that high volume node. Maybe, you know what, let's just make it a 1, 2, 3. Let's make it a 3 tick just for fun. Let's see if that works. This is the one I'd rather get. I took a market order there. This is the one I was originally looking for. Remember the edge of the range at 53 area? That's this one right here. The one we're in now, I took a market order on just to illustrate the point. We'll cancel this one now and just watch the ones we've got there. Well, now we're getting some good momentum. This could break down now. This is probably going to fill. I'll probably get that one. And then we'll see if we can catch another bounce here. Okay, traded there. It didn't fill yet. That's always a sign that you're at the right price. When it bounces and you don't fill, I'm 47 in the queue and there's about 50 there. So, you know, I'm at the back of the line. That's a good sign at the moment, but it needs to get up a few more ticks or I'm going to get filled like that. All right, so now we'll throw up some targets and we'll see what happens. So this is just an attempt to scalp the edge of the range and illustrate a point. I don't know if it's going to work or not, but we'll see. Let's put one there and we'll put one there just for round numbers. Again, I'm not saying the bottom can't fall out here. We're at the edge of the range. We've blown through it a little bit. The selling has picked up. Look at the bar by bar here. But unless it continues, we will bounce. This has to continue or accelerate. It doesn't have enough momentum to keep going down. Now the buyers are coming in. Look right there. See that on the delta, on the bar delta? Look there. Watch here. If we're going to get a bounce, it'll be right now. This is what Lee and I call a puke, where people that shorted that low can get trapped. Or it could just get continuation and the bottom could fall out, in which case I'll just flatten out and we'll look for a better entry with another trade. I'm watching the buyers right here. As long as they keep trying, I'm okay. If they just totally get run over, then I'll just flatten this out. I won't wait for it to get down here. These are just catastrophic stops, by the way. Those aren't my stops. I'm just going to get them way out of the way so you don't think they're stops. That's just in case the platform crashes or something. All right, so look at the buying over here. It's not that hard selling we saw a minute ago. I'd love to see some blocks come in on the buy side. That would confirm my long scalp here. I'm not getting them yet, but I'm seeing a little energy, so this could still go either way. Yeah, I mean, it's testing the range. Looks on all the indexes are at the edge of the range. So, you know, if it doesn't hold here, then that portends lower prices, and that's fairly significant. But at the moment, it looks like we're going to at least make an attempt to hold the bottom here. So let's see what happens. I'm resetting all of these so we can watch the fresh action without any old trades on there. Okay, I'm at break even now on my long. Then it just traded down a couple of ticks. I think we're going to take the first one off on a tick of profit, and then we'll see if we can catch a runner on the other one. That's what we'll do. If it even gets there, it might not even fill up there. I might get run over here. We'll see. If it bounces up and it can't get back into the range, you might see the sellers reassert themselves, in which case I'll get run over and I'll just hit flat. I don't think that's happening. It looks like we got some decent buying here. But I'd rather see buying in blocks than these 1s and 2s and 3s of micros and, you know, ES. These are ES right now. So I'm watching micros go here. If we get filled on this one, we'll be in a good spot to let the other one run because we'll have a tiny bit of profit to work with here. But at the moment, it could go either way. The low's trying to hold here in RTY after some selling. Same story in YM. NQ has bounced off the low successfully. It could head up to the edge of its range. That might probably pull ES up with it, I would think. So see that turn happening here? See that? That's what I'm playing. This is not a good example of this. This is A good example of this hits that and turns really hard. That's called a high volume reversal. This is not a high volume reversal. It's just kind of running out of gas on the sell side, which might end up working anyway, but it's not as good of a long scalp setup as a high volume reversal is. NQ actually had a nice high volume reversal that was more tradable. ES's is not getting the kind of follow through. There we go. Okay, now we're getting the follow through on the buy side. We should get filled on the first one right here, I think. Let's see. I'm 17 in line. Yeah, I'm going to get filled right now. And boom, we did. Okay, so now we can put the stop at break even and just see if we can get a runner on the rest of this. So there's a good example of a scalp long. In a market that's testing the downside, but I don't want to join that short. It's just too dangerous. We could end up the other side of the range real fast here. So let's go ahead and lock in 2 ticks. So now we got a total of 5 ticks out of this trade, considering the other contract on this one. We'll scoot the target up a bit. Maybe this guy will pop. I doubt it, but probably get filled with my take profit stop there in a second. Notice how the range edge held, and now we're heading back to the other edge of the range. That's very typical. That's what you want to trade. Okay, so we got filled. We're out. So we'll cancel the other orders, and that's how you scalp the edge of a range in the overnight.
So important to avoid the temptation to get suckered into the big idea, especially at a time like this when there's just nothing to hang your hat on with regards to a big idea.
Yeah, Rob, this is nothing about your trade. Your trade can't manage risk, so that's fine. If you want to do that, that's fine. I'm just going in and I'm putting up a tick or two of risk and I'm getting ticks. And then I'm out of the market. So right now I have no risk on, and you have the risk on for whatever your position is. We could have some event happen in the news and the market could gap up 20 points and you'll get stopped out wherever you are. That's not going to happen to me because I don't have a position on. And again, I'm trying to teach you. I'm not telling you you're right, I'm wrong. I'm telling you that you're basing your decisions on some risky behavior for overnights based on this instrument. And and that's fine if that's your strategy, as long as you're aware of it. I'm not sure you are. Okay, so. Oh yeah, Steve, trading the overnight is very different than the US morning. The volume's very low. Again, Rob, I'm not picking on you at all. I totally am, you're welcome here and I want your feedback. I'm just trying to help you while you're here. What the stuff you're saying is stuff we hear a lot here. And I'm just trying to give you a different perspective. That's all. If you told me you were short from the close Friday, and your stop was at 59, I'd say, well, hell, I'd let that ride too, because, you got nothing to lose. But if you're working for a 3 or 4 point profit here and you're not taking profits when you have them, that's what I'm saying is the mistake. You're predicting the future. Cool. All right. If you don't want to hear any more comments back, then don't make any more in the chat, and I'll end it here. But I'm trying to help you. I'm not criticizing you. All right, let's see. Yes, so Steve, I was commenting on that. The thing to understand about the overnight is that the large players do not trade the overnights. They can't. There's no volume. So what happens is every time the regular trading hours open, or just before that in the morning, that's when the volume picks up and the hedge funds come back in, and some of the institutional players that trade the regular trading hours will come back into the market. But it's just too thin for them here. They don't trade one lots, and they can't trade the size they're used to because the tape's too thin, so they won't. So because of that, there's a lot of good scalping opportunities in the overnights and in the mornings and in regular trading hours. But you are correct in your statement and your question that they are very, very different animals, even within the same instrument. Spoofing is nonsense. Yes, spoofing happens. Yes, it's illegal. No, it doesn't stop anybody. And beyond that, we couldn't care less about it. That's why I barely look at order size. You can see I've got that almost grayed out. I really don't care if somebody's spoofing a price. I'm trading what's actually happening, not the orders. And spoofing is done in orders, not in trades. You can't spoof a fill. You got filled or you didn't. If some guy hangs a 500 lot up here at 60, I'm not going to make a decision based on that. I don't care. It's meaningless to my edge down here. So, Yeah, the beauty of trading order flow is you don't need to think about anything like that. That's all just extracurricular nonsense that doesn't matter. You just have to stay in the now. As I like to say, you have to stay relentlessly in the now. Like right now, we're breaking down again, and this could be a great short. In fact, I'm tempted to short it this time because the blocks are going by on the sell side. So let's try that. So I just took a market short, and let's just see if we can break it by a tick and fill for 4 ticks there. So that's what we'll try. I see some energy on the sell side, but I'm not sure it's going to get any follow through. But just to show you the example the other way, we'll do that. This is called a ledge breakdown. It's one of my favorite setups. I think we might have enough momentum to do it, but I'm not convinced of that. What I saw down here led me to maybe think that. So I'll watch it, and I'll update that as it changes if it does. Meanwhile, we'll keep that short on there just as an example. And, it could bounce all the way up to here easily. And I'm not worried about where it's going to stop out. Again, I'm showing you an example. I'm not trying to make money. We don't have like a trading room where somebody sits and talks and makes money in front of you. That's also nonsense. What we do is we teach concepts in our classes so that you can go back and practice them and make money yourself. That's the idea. Not watching somebody else trade. You don't learn anything watching somebody else trade unless they're really explaining it in detail, and then it can be useful. But just, some guy saying, I'm here and I'm there because the proprietary Algo Box 9000 says go long, that's just furu nonsense. Okay, let's see. I see some questions about 1 tick MES commission will cost you 40% of the profit. Commissions are irrelevant. They're expenses. If I can make a trade that is profitable at all, it's a good trade after commissions.
That was an answer to Joe's question. He was asking what the fees were like in micros.
Oh, I see. Okay, got it. Okay. How often do we do a boot camp? We're doing one starting April 6th, and as of the moment, that's the last one on the calendar this year. We're going to revamp and come up with a new curriculum for a 2-phase boot camp, maybe later in the year, but the only one we have planned right now is the one April 6th. And we are taking enrollment in for that right now. There's already a bunch of folks in it. We will take up to 50. And so if you're interested, you might want to sign up for the current one.
Yeah, definitely. We would love to have any and all of you. There's still room for a handful more people for sure. No problem. We do keep them reasonably small. We don't pack these with like 100 people or anything like that. So everybody can get really focused attention. And there's homework. I mean, this is a very hardcore thing. This is not
it's like going to a graduate school class on trading order flow.
Yep.
I do 2 weeks on price action. Lee does 2 weeks on order flow structure and the footprints. And we do a lot of stuff together too. All right, so we're break even on our short. I think the low is going to go this time. You can see NQ's leading down. Watch that ledge break right there at 16. If that one goes, there's a good chance ES will go, and I'll get filled on my short here for 4 ticks. And again, I'm just playing the ledge break. I'm not anticipating it going lower. Again, just illustrating an example. This isn't how much money can I make trading in front of you. It's showing you live examples of the kinds of trades that I take. And this is a good example of a ledge breakdown. But it's not a good trade. I have setups, and then I have ways of ranking the setups. I use poker hands, ace king being the best, and a pair of tens, or that would be the worst, or deuce 2 or deuce 7 unsuited is actually the real worst. But right now, this short is, I'd call this a pair of jacks. It's not a great setup. It's right on a high volume node. The momentum is kind of down. So, a pair of tens, maybe a pair of jacks. So not a great short into the ledge breakout, but it's probably going to work, I'd say. We'll see. When I have a really good setup, it's an ace king, and the odds of when those occur, they're like 80-90% winners. It's a coincidence or a confluence of a bunch of factors at once that make a setup that good. During regular trading hours, at a ledge, high volume, momentum, an inflection point that's the edge of the session as well as the ledge of the current trade, all those things. If those happened all at once and, we were seeing orders getting pulled like we're seeing right here, and the volume was picking up as we accelerated down, that would be a perfect ace king. We're not seeing any of that. We're seeing a slow dribble at a high volume node at the bottom of the volume profile in a really sluggish tape that kind of feels like it wants to break down, but every time it tries, it doesn't go anywhere. That's how I describe what we're seeing right now. So it gets a pair of 10s. I still take it. If I was trading just by myself, I might not take it in class. I'll take those just to illustrate them. And, I have a little bucket of money I'm willing to throw away while I'm teaching, and that's okay. That's one of the reasons.
Bag of quarters.
Bag of quarters, exactly.
That's a common way that a lot of us have come to think, is following in Jeff's footsteps, of the idea of giving yourself a small budget and not worrying about it and just saying, hey, I'm going to go play. And it's like going to the arcade, if you are old enough to remember arcades, which were always a lot of fun, with a $20 bill in your pocket, and that would last you a couple hours, So,
yeah, particularly if you were good, you could get some challenges going, and
Yep.
Yeah. I spent a lot of time doing that. I was around when people were starting to code those things up on the computers. So we were all trying to figure out how to make all that happen.
Yep.
Looking at our Pongs and our Ataris and my TRS-80, and I had an MSI kit computer that I built in the 70s. Okay, so we had to take a profit in here. I'm watching the tape, and there's some buying there. I don't know. I still think this might go, but it sure is going to tease us before it does. What the heck? Hang on one second, guys.
No problem.
Some sort of commotion.
Uh-oh.
What is that?
Hope everything's okay.
I don't know. It sounds like an animal fighting for its life, but...
Eek. Kind of like a cat getting to a raccoon or something?
No, it's this little miniature schnauzer we have. I call him the neighborhood, not mine, the neighbor's neighborhood motion detector. There's a deer between our two houses, and he's barking at the deer. The deer's looking at him like, what's your malfunction?
Exactly.
Okay, so I've got a little profit here. I've got 3 ticks. I had 3 ticks. It didn't take out the lows, so this trade is still sort of working. I'm tempted to take the 2 ticks. I don't think this is going to go. I'm going to scoop my offer up and see if I can get filled for 2 ticks. I just don't like the energy it's going down with here. So if I can take profit, I always do if I don't feel like it's going to fulfill its promise. So let's see if I get filled there. It could break down, but it just feels like it doesn't have enough momentum to do it, is my gut. At least not at this particular second. Very good, Aviv. We'll see you for the Ides of Monday. Boom, we got filled. Okay, so there's another little tick winner as a demonstration. So anyway.
See you tomorrow,
Yeah,
Aviv.
as far as this tick conversation, let me just comment on that. If you're trading ES is $12.50 a tick. And, if you're a high volume trader on ES, you can get a commission rate of around $2.50 to $3 all in. And if you're not a high volume trader, $4. That's $8 profit, $8.50 profit for a tick. So why wouldn't you do that? In a restaurant business, you can't make that kind of profit on no risk or very little risk. I mean, a tick is pretty easy to get if you read order flow pretty well. So, do that with a 10 lot and, make $12 or $8 on 10 at once. That's the right strategy, is to scale up what you do well, not to try to hold out for longer moves. If the market's not giving you a longer move, then that's not the right strategy. So, let's see. Yeah, there's no momentum at all. We're going to wrap this session up pretty early tonight, I think. It's just a very slow dribble. And instead, I think I'm going to do what I like to do on Sundays, go to sleep now, and then get up at about midnight for the midnight oil trade. I'm going to talk about that next, and then we'll close out this session. We'll talk about the midnight oil trade, which is a gold and oil trade that I do overnights on Sundays. And I'll talk about that as soon as I come back. I'm just going to go fill up my coffee, and then we'll talk that, and we'll be done. So I'll be right back.
Go for it. So when Jeff does wrap up the session, he will most likely call for Burning Desires, which is just the last call for any questions or anything you just absolutely got to get off your chest. So maybe start thinking about them now. If there's any nagging things that have been in the back of your mind or anything like that that you haven't already asked, or that you always wished you could ask somebody who might know or something like that, get them ready. Throw them in the chat so we can just bang them out once we're ready to wrap. I thought this was going to be a much more crazy reopen after that insane push at the end of Friday, but that's what you get for having a bias going into anything. Market will do its darndest to mess with you if you have any preconceived notions. Three CHRs, three. I'm not sure what that means, Joe. I thought maybe it was three charts, characters, three characters on the extreme right. Extreme right of what exactly, Joe? If I can answer it, I'll tell you, but I'm not sure what you're referring to. ASL, where? Extreme right of what? I don't know what I'm looking for. What I'm looking, where am I supposed to be looking?
Okay, I am back. So
Joe was asking, maybe you know what he's talking about. What are the three characters on the extreme right, ASL? But I don't know extreme right of what or where. Do you know what that refers to?
Characters AS price sale. I'm not sure what he's
sales.
Three
So
characters where? What are we talking about? Where?
Yeah.
You talking about over here? Yeah, they're not three characters. There's actually more. It's saying where that trade is going by. I've got it color coded, and then it's also telling me if it's at the ask, the bid, below the bid, above the ask. That's what it's doing.
Oh, probably that wasn't an L. That was probably the left half of another character that was partially hidden by the other chart. That's probably why it looked weird. Yeah. Okay.
Yeah. It's a weird quirk of Jigsaw. This is the narrowest you can make this. It won't go narrower. It's just that's what he sized that tape up to. So I put things over them just to use the space better. That's why I have it that way. Yeah, I've spent a lot of time optimizing my layout here to get the absolute, most out of every tool that I'm using. So look at all the buying coming in again here at the lows. Not a lot of blocks in there, but there's a couple, and they were above the trade. See those? Those traded above the current trade when they went off. So those were blocks that bought above the market. And that's really significant at a low, right? Those were guys that really wanted to get filled down there for one reason or another. And again, to the earlier question, we don't really care what the reason was or another. We just know that it happened, and that's significant. Why they did it doesn't matter. I don't care if they were getting long or short or opening position, closing position. It just was an event that's significant in the tape because it pulled the price up. And so far it's holding where that pulled it up to. That's why that's significant. And that's why you learn to watch the tape. It pulled it up from 51.75. So 2 full ticks at 21 contracts that were above the ask. That's how that happened. Why would someone do that unless they really had to, right? Okay, thanks, Joe. Thank you, Andrew. I really appreciate that feedback. Is there a tape reading finesse workshop to hone skills in the library? There's several of them in the library. What I would recommend you do if you're TRG member and you've been through the boot camp, the first things I would do to expand my knowledge, this is our library. And what I would do is I would go back. There was a clinic that I did at the end of last year on scalping. And let's see.
I think it's in workshops, wasn't it?
Was it a workshop? I think it's
two-parter, I thought.
Yeah, it's right down here. Wait a minute.
That's ad hoc.
It wasn't. No, wait a minute. Hold on. We have so many recordings here. There's so much information. You guys have moved things around a bit since I saw it.
Yeah, workshops. There you go. December scalping workshop right at the bottom.
There it is. Okay, the December scalping workshop. So if you look at that, that's where I would go next. It was 2 sessions that were quite long. The first one was almost 3 hours, and all I did was talk about the tools and how I use them. And the second one, I actually went through some live examples. And so this is where I would go next if you just finished the boot camp. Other than that, there's some other stuff I would look at. I would look at Lee's sessions on why price moves. Those are clinics. This one here, I would also look at the Delta Deep Dive back from February of last year. Those would be very helpful too in understanding the tape in the short term.
Yeah, Lance mentioned the liquidity clinics. Those are really good too, definitely.
Oh yeah, definitely the liquidity clinics as well. Yeah, there was 3 of those. But yeah, I would do the scalping workshop before I did the liquidity clinics. They'll make more sense if you do those first. Cool. All right. Any other questions or comments? We will give it another minute, but it's almost 5 o'clock here. So we've been going a little over 2 hours, which, excuse me. When did we start this? We started at 2:30, 3:30. So we run. I don't want to go too much longer because I have an early morning with the Ides of Monday at 5:30. So we'll go a few more minutes. I'll take a few more questions if you have them. Otherwise, we will wrap it up. Thank you, everybody, for coming. The Midnight Oil Trade. Thank you. I'm glad you reminded me of that. I was about to forget. Okay, so what does that look like? Well, I trade oil and gold on Sunday nights. They often have extreme events. They test the edges of the volume profile. So this is oil right now, and this is 60 minutes. The way I do this trade, look at this area down here. The last few days, the blues are regular trading sessions. The gray ones are overnights. This area down here has been bought, and that's a good distance from us. That's the 57, 58 range. So anything down there tonight, like the edge of this high volume profile, if it got all the way down there, I would get long that simply because it would be so asymmetric. It's an area that's gotten bought a lot, and it got bought aggressively. So, we didn't stay down there for any length of time. So that's the way I would look at oil tonight. There's nothing I would do shorting oil if it moved up. I might join a long breakout of oil if it got to the other end of the range. But with the Suez Canal stuff going on and maybe some news rumors running around that, I probably will avoid oil. I am currently in gold at the moment. I have a long on in gold that's a swing position. I might scalp around it. Let's have a look at gold and see if there's anything interesting to see there. Okay, so basically I have liked gold anywhere below 1700. I'm long from 1690. Tonight, and again, this trade, the midnight oil trade, is just about the recent range extremes. So that would be, the 1720 range would be a nice one to try as a potential long in gold if we got down in there. I would not short gold. I'm long it. So, I wouldn't add to my long, but I would certainly look to get long down here, and I might add to it down here. I think it's got some good potential, as the economy gets going again, if it does. Otherwise, it's done a really nice structural low here in the low 1700s, and that trade's worked for me for a couple of weeks. So that's what I've been doing there. That doesn't mean it'll work tonight, but it's worth watching. So that's the story on the midnight oil trade. Thank you for reminding me. I generally play that only at the real extremes if I do it with futures. Sometimes I'll do those same areas using triple ETFs at the close of a session. For example, I did that. I was long gold, but I also got long when we were down in the 1790 area with the triple ETFs. Let me show you what that looked like. So this is Thinkorswim, just so I can show you. This is gold over here. When it came down, it had been going down for a couple of weeks, and then this low got established. We had a one-day gap up that was really substantial, and ever since that point, I've been long gold. I didn't get long at the low. I got long at 1690. The low is 1673. 1690 was right here when it took out the previous low. That was where I entered. And that was during a regular session. So I was able to do that with the triple ETFs. I took those off last week up in here. And now I just have the gold futures long. And we'll see if we get another pullback to reload or if it goes anywhere. In the meantime, it's just consolidating up here. So nothing to really see. So anyway, that's my midnight oil gold trade and the oil trade and what I'm doing with those. Let's see, what else do we have?
You're welcome, Ocho. Thank you for joining us.
Is it possible to use read the tape for swing trades? Yes, I've answered that a couple of times. Absolutely. You do it on your entry, and every entry is a scalp until it proves otherwise. So the same technique would work for your entry to your swing trade, and then you just have a longer horizon, and you have to look at the data more globally. You can't look at it as real time if you're doing that, but if the risk reward works for you, you can do that. Absolutely. I wouldn't try. I prefer to do those kinds of trades. They're still intraday, but they are swing trades, one end of the range to the other during the day, that kind of thing. That's an example where the scalp will get you into a very, very good swing trade that might be 20, 30, 50 points because you're scalping at the price action, and that is going to naturally flow into the swing position because that's a longer time frame, if that makes any sense. Hopefully it does. Let's see. Yeah, what JVC said, it's about getting good entries. All trades are about getting good entries. It's like buying real estate. You don't make money selling real estate. You make money buying it at the right price. Same thing is true of trading. You make money getting a good entry. As long as you manage a good entry, it will make money. If you get a bad entry, you're screwed because you have to constantly fight what would have been a good entry and often is your exit from your bad entry. So that's why the entry has to be your focus, Dan. Yeah, it's going to keep doing this until it runs out of traction. It's pushing down just a tiny bit more each time, but it's really not getting anywhere. Look at the volume swings here. It's just not picking up any energy, and that it could just do a slow dribble all night down. That's not out of the question, but I wouldn't just assume that's going to happen. Look at this volume. It's anemic. It's getting smaller each time it pushes down. We pushed down on 40,000, then 2. Then we went up on 1,300. Then we came back on 3,000 and 2,000 more and 1,000 more, and then down on 1,000 there, 2,000 there. But we're not getting anywhere. We're not going down anymore. So, yeah, there's a little bit of momentum, but it's risky to join it. We could easily go right back into the range, and then where's your stop if you join down here short? It's just too hard to manage risk. Where are you wrong is what you want to ask yourself. And you're wrong. I mean, if you're trying to short the breakdown here, you're wrong like from the middle of the range, and that's just way too far off the trade to be sitting in a short. So, again, if your target is way down here and you entered at the close Friday, then yeah, you could let this go low ways and give it some room. That makes some sense. Okay, cool. Thank you, Sebastian. Appreciate it. Any final questions or comments? Any other questions about TRG or about the boot camp that's coming up? Check it out if you're interested. Yeah,
I want to say a quick reminder to everybody, especially those who aren't TRG, is we've got a couple of sessions of our spring open house remaining. So for this coming week, we're opening up our weekly Q&A session on Tuesday to everybody, and then especially the Friday NFP special. This is going to be a very rare, unusual, weird, who knows what's going to happen session because it's Good Friday. It's a holiday day. The CME is closing early, and they're going to be open for just a little tiny window of time, and anything could happen. Nothing could happen. Who knows? But it historically is a rare thing that could lead to very interesting possible trading opportunities. So it's going to be a fun one to see what happens.
Absolutely.
So join us. Definitely. Even if you're not in TRG, this is our free open house, so take advantage of it. Come join us. We would love to have you. The more the merrier. It makes it a lot of fun. So
That's true. I was trying to find the link to the open house page, and I can't find it.
It's /spring-open-house.
Okay, yeah, here it is.
I don't think it's, there you go. I don't think it's actually linked from the homepage. There you go.
Yeah, I just want to stick it in the chat so people can.
Oh, yeah, good idea, huh?
Yeah. There you go. That should work. That might go out to Facebook first. Let's see. No, that works.
No,
there
won't. It'll work, yeah.
Okay, cool. All right, so this was the Sunday reopen. We had a fishing trip Thursday. We have open Q&A on this Tuesday, and then the NFP Friday. That's what JVC was just talking about. So please check that out, and make sure and check out the boot camp. I'll put that link up one more time. The final boot camp on our calendar at the moment is April. We are going to revamp that format and do something different going into the fall. So if you're interested, please join us for our April boot camp starting next week.
Definitely. We would love to have some new folks. Welcome to the group. So
absolutely. Let's see. Hang on. I just screwed my keyboard up. So how can I unscrew it?
Good trade,
okay. Where did Numlock get moved to? There we go. Okay. All right. So any other questions or comments that I can answer?
Let's call this Burning Desires. So this is that moment that I was talking about while Jeff was getting water.
Final questions, final comments, Burning Desires? We don't have any? Okay, guys, thank you for coming. We will see you hopefully at our next public event if you're public, and that's the Tuesday. And hopefully you'll check out our boot camp. Thank you for joining us today.
Everybody else, we'll see you in the morning for IDES.
Yeah, IDES of Monday. Bye-bye.